Hello everyone, my name is Danny. In today's video I'm going to talking about the moving averages. This section I'll be talking about the EMA, how to use it, and on the future video I'm going to talking about the different moving averages, how to use them. Let's get started. The basic information about the EMA is exponential moving averages. Normally moving averages is technical indicator that is using for the trading to find it out the area of the support and resistance. That is kind of the normally used as a dynamic support and resistance. It's really important for us for find the area of the confluence for use it as a trade, because every single minute is not good opportunity for us to open the position, but we need to wait for the find it out the area, support and resistance, and then open the position. I'm going to introduce I'm using the 10-in-1 indicator because it's really easy, just for the really important, because if you use like a 5 moving averages, it's if you have an even pro account or even like a premium one, still 5 of your indicator or oscillator is being full on the chart. You can add more than 3 for the basic one, and it's better to use this one. It's really free, it's free indicator. You can find it on the indicator under here, 10 in just write it down, 10-in-1 different moving averages. I'm using the 10-in-1 indicator, the 10-in-1 moving averages. I'll put it on the normal, but you can put it on the close and high and low, depend on your strategy. I'm using a normal MA, right? Just quickly change this one to the 7, and every like asset has a different moving averages behavior, and if you use a moving averages, you need to be careful about the what do you use it for, because each asset has a different number. You need to get a back test which one is better for it, should be different, and I highly recommend it going for the change it to the like a find it out what's the best one for you. And I'm gonna quickly going to the introduce what do I put it on there. Normally I put it EMA like a 7, 25, 100 and the 200 EMA. It's better to put it on the 3 or 4 and use it as your own. When you apply, you have a 4 moving averages in this area on the chart. White moving averages, white is show us the EMA 200, and yellow is show us the moving EMA 100. Blue show us the EMA 25, and the green show us the EMA 50. But you need to find, if you trade the gold, I have a different number, different moving averages when I trade the like a Bitcoin. This is 4 moving averages being added on our chart, and we need to find it out. Before I start everything, I highly recommend you to find it out the area, horizontal support and resistance. That is help us a lot for find it out the area of the confluence. And we use it a lot in the chart. When I'll put it on the link in the description if you want to find it out, how to find it at the area of the confluent. Watch that video first and come into this video. EMA, and the first thing that is we need to understand the moving averages at first. Moving averages, as you can see here, small moving averages show us as a support. As you can see here on the weekly time frame, this is really important. This area is really important for us. And this area is really important for us as well, because we have a 50 EMA and we have a 100 EMA as well here. And the 200 EMA is here as well on the weekly time frame. As you know, moving averages, any time that you are on the chart, based on those area, you show us we're gonna market this one, and here you need to find it at the area of the support and resistance. Then we're gonna go in for the daily time frame. What we have on the daily time frame, this area, it's really important for us because we have a moving averages 200, EMA 200, and the EMA 100 on the daily time frame. Is kind of the double support and resistance for us, because we have a same area on the here, same area for the moving averages as well on the weekly time frame as well. Then we're gonna go in for the another level. We're gonna go in for the lower time frame. We go into the 4 hours time frame and find it out where is the other moving averages is. As you can see here, moving averages is crossing each other, and potentially when the moving averages is going to the horizontal way and on the side way, and when the moving averages has a really bullish sign on the chart, we not use them because they lose their power. When the moving averages highly going, for example, very sharp movement, we're not using it because it's gonna be, unless we have a really smooth move, for example 45 degrees, 30 degrees. When you're going for the sideway like here, it means market is ranging. We can't use the moving averages under this area, because when you use the moving averages, when it's going to the sideway, market is ranging, and especially small moving averages, market is ranging. And if you want to use the moving averages, you need to go in for the lower time frame. Moving averages is really work it as a support and resistance. I use the EMA and I'll show you how to use that. You know, every time that you want to open the position, you need to find it out what we are now. Are you in the middle of the range, or are we on the support and resistance? That is really silly thing. That is, you open the position, for example, long and short on this area, especially for long, because this area for us is show us is on the weekly time frame. We have a one big resistance on here too, as a EMA 100, plus we have a big resistance on the 27,419, pretty much like a that is estimate can't exactly say that is exactly this number because market is not perfect. And the EMA as well, that is the area potentially reversal is happen. But if we pass it through this area, we need to cautious about this area 2800 502, because this area for us is another resistance. As much as we pass it through this moving at EMA 100, still we need to wait for the confirmation only. When they pass it through the like a EMA and the moving averages, we have a one retest to the area as well normally on the like a market. I'll just quickly show you. When they like a we pass it through the one area, we come in and retest the normally, not all the time. We have a retest to the area as well. When they're coming down, when they pass it through this area, break the record, break it, we normally have a one retest to this area as well again. And this one is, if this one is hold the price, the moving averages hold the price, we going for the long position. If they break through that, we going to the short position after get the sign of the weakness and the sign of the strength. Another thing that is I'm gonna show you on the moving averages, when the lower moving averages going above the higher moving averages, we have a sign of the bullish. But to be honest with you, if this one is happened, we get it on the price earlier than the moving averages, because you know moving averages has a delay and sometimes it's too late for the open the position. This area, for example, moving averages 100 break above the moving EMA 200. This area, they show us the something potentially reversal happen, but you need to wait from here to there to open this position. As long as you can get a price, when the price is movement, you can get a better confirmation on the price as well. When they break through the like a one big resistance like a here 21,900 and retest it, you can open the position under this area. As you can see here under this area, we have a really good sign of the bullish. EMA, we break through the big resistance 22,000. When they break above that, we retested this area and we have a big movement up to next resistance area. But if you want to wait for the confirmation on this area, still you need to wait for another way to open the position on here. As long as you can open the position on the way to going up, for example, if they open the position on here, on the long position on here, right, you can get like a good risk to reward ratio 5.9. But if you want to open the position based on the moving averages crossing each other and break through on the top, right, we need to wait until to here. And we're gonna get a lower risk to reward ratio. Final tip for using the moving averages. I highly recommend it to use the moving averages to find the area of the PRZ, potential reversal pattern, because moving averages, it's really good dynamic support and resistance. And if you want to use it for to give you the signal, like this area, you're gonna be late for the open the position. First thing. The second thing, you need to get a lower risk to reward ratio. I highly recommend that just using for the dynamic support and resistance, and mix it with the Fibonacci level and the horizontal support and resistance, plus supply and demand. I hope so this video helpful for you. If you added value to you, please smash the like button. And if you like it, get more information, you can follow my Discord channel. I'll give you some of the bullish and bearish signal on the market and analyze the market. And see you next time, guys.